Otsu here, and this is Observations with Otsu. It's been a couple weeks, so I kind of want to get back into Square with things, and kind of just some preliminary things. I will, if you've been following me for some time, I am going on it's a vacation ish kind of thing. It's more of a, I mean, I'll still be here. I'm calling it kind of a workcation, but it's not really work either. Like that's just that's what's just cool about the crypto life. So crypto has allowed me to start to go out and see the world basically, and it's something that I've been able to do for a couple years now. But strategically, things like the pandemic, et cetera, have prevented me from doing so. Now it's no longer preventing me from doing so. So I've had this planned for about 6 months now. Anyway, that's some preliminary things. As far as the videos, though, none of those are going to change. I'm actually planning to pre-record a lot of videos, and so I'm used to doing about 3 videos a week. I haven't done a video for about 2 weeks now, though, but I'm going to ramp up those videos to about 3 per week. So the Otsu videos, they're observations with the Otsu videos. Those are going to be recorded, maybe about 12 hours before or less before I upload them. So I'm recording this now, and I plan to upload it within an hour after it's done. But more of the theme videos, those are probably going to be pre-recorded because the price probably won't be so sensitive in that regard. I'm also going to have, I got a few different call to actions, so to speak. For those of you, a lot of you guys have been interested in the Avian bots, and it has been delayed in the past couple weeks, even the past month, due to trying to optimize some features because of my trip, things like that. I am going to release those this week, so we're going to start seeing those. So if you have signed up for that, please don't be discouraged. It is coming up, and I'm going to have a few different things going on with that. I also I have not shared this in the Telegram, but I will today. I have partnered with BingX. This is my first ever partnership that I've ever had, of significance, I should say. I've had a few lower level partnerships, but this one's a legit one. Part of that is I have custom ref links that give you guys sign up bonuses, discounts for trading fees, things like that. I do get an increased commissions out of that, just to give you guys notice about that. I don't know how this works. I know I try to be as honest as I can, and the more I say that, the more it sounds like I'm probably not. And I don't logistically, that's my goal is to help you guys, and if you guys want to support me, that's a free way that you could do that. Okay. I also have the Apex Academy. It went really successful over the holiday season. And I started that around Thanksgiving of 2022. It ended at February 1st of this year. When I come back from my trip, this is a 40-day trip, I will, the very next week, I'll be launching season 2, quote unquote, of the Apex Academy. It's going to have a lot of increased features. I'm probably going to shorten the videos because a lot of that is going to be a little more refined. I can be able to explain the same information better, and it might. I'm considering even lowering the price by trimming maybe some features or some kind of content, because I'm trying to decipher what the right price is, because I don't want to do it too low. Otherwise, it's kind of pointless for me to do it, because this is more of a mentorship thing, right? I have to spend active time with people that have paid for this, so I'm spending less time with other clients. I'm spending less time with my family, things like that. So I feel like that's just a fair comparison. That's what everybody else does in the world, and so but my goal is to find the correct price. I don't want to do it too cheap because it's not worth my time. I don't want to do it too expensive because, it's I don't rope in the right people as far as being able to help them, right? So if anyway, so I'm going to try to figure that out. That's pretty much the goal. The materials are mostly ready, and that's one reason I'm able to do it cheaper as well. Is a lot of the content is already either recorded. I'll try to use all fresh content, recorded content, I should say, but the actual notes, most of that has been taken care of, and so we'll go through that. In addition to that, I also have the trading journal that's going to be coming up. I'm probably going to launch that while I'm on my trip. probably within the next couple weeks. Probably won't do much next week because it's a travel week for me. But the 2 weeks from now, I think I'm going to launch that. I think you guys will be excited. That being said, you are here because you want to see a review of Bitcoin Ethereum. From now on, I think I'm going to skip the total market cap, by the way, and I'm also going to skip the Binance or the Bitcoin dominance chart. You might see it in some videos, but I used to do that overall per video, and I think that causes too much time wasted. So I think I'm just going to skip the Bitcoin and Ethereum, and then a couple alts. So that's what we'll look at today. We're going to look at Bitcoin, see how it affects the market, see how we can correlate any news. We're going to look at Ethereum, see how that coordinates with alts. There's a Shanghai hard fork coming up, so we're going to see how that plays into it, and then we'll look at a few. We're going to look at a few alts. I'm personally looking at. I want to look at Dogecoin because of the Elon Musk thing. I'm going to look at SHIB because I think SHIB is kind of leading in that same track, and I'm also going to look at Aave and a couple other ones as well. Maybe some ones I've seen so far that might be moving. So anyway, you're tired of me rambling. We'll get started. All right, so first things first, this is Ethereum, but we're going to go to Bitcoin first, just kind of how we always do it. As you guys may know, so I actually haven't been posting very much content at all, video, tweets, anything like that, really. I've just been way too busy for things for the trip. But one thing that I have talked about very vigorously is this reaccumulation pattern on Bitcoin. It's not confirmed yet, so it's not, if you are... I'll be honest with you, I'm not the best Wyckoff person. I'm not very familiar with it over time. I've learned to identify certain patterns, but I don't necessarily correlate them with the value and the angles and all that. So I'm not one of those like hyper, fixated pattern people. I just look at them in abstract because my viewpoint, statistically and just looking at charts, is that this Bitcoin is a different asset class, right? In my opinion, crypto is a different asset class. It should be. It's not quite identified as anything, honestly. It's always identified as crypto, I should say, but people don't really classify it in its own asset class, even though it is. And one thing that I've noticed by this is that it takes things differently, and so therefore I think Wyckoff should be applied a little bit more abstract to kind of integrate that difference of asset class into this. Now, I said all a bunch of mumbo jumbo. Is this an excuse for me to try to use it? I don't know. I don't really care because Wyckoff is more of an abstract type of. It's a theory. It's a market theory, and theories should not be taken so harshly and so concrete and literally. They should be taken much more in a fluid capacity, and we can see this here. This is very typical of a reaccumulation pattern. And so what we're looking at here, I've got a lot of stuff here. I'll get to that in a second. But what happens is you usually get a drop that usually touches the AR. It usually comes back up, and then you have kind of like a creek sort of pattern, and then you have kind of like an SOS and launch up. And so that's kind of what we're seeing so far. The bad thing about this is that Wyckoff patterns aren't technically confirmed until they're like way up here. That's why I don't typically like to trade Wyckoff patterns either, is because they have once you find them, they are 95% completed. Whereas I was looking at this right around this range. In fact, I think I was posting publicly right here, and we got this channel that I'm looking at. And so let's kind of adjust this. Let's go to Binance, and you can kind of see the pattern here. Kind of see this going on here, and then you also see this was the channel that I'm kind of looking at. That's not exactly, one of the reasons I did that is because it touches up here, but that's not really very fluid. What you're seeing really here is almost like a continuation flag. And so I'm not so much interested in this one. I'm very interested in this, because once this builds above the trend line, then you should be able to long that, and it may even be pretty short. You could do it pretty tight stop there. You could do it pretty wide. I'm not sure if this is all on every exchange, but you could target the lows right here. Typically what I do when I look at breakout patterns, is I typically do either the close of the previous candle right before the breakout, which would be right here, or I target the overall low of the entire pattern. And it just depends. It will depend on the type of environment that you're in, the type of pattern that you see. Something like this, I'm okay using a little bit tighter of a stop, and so I might even widen this up a little bit to go to like 180 if I want to do like a 50x, for example. Then that way I can be automatically liquidated, and I don't have to be too concerned about the position. So, but overall, I would do a little more technical than that, but that's pretty much the gist. I don't know if I'd be interested in the lows per se, but that's also more of a safer approach, so it's okay to do that. Whatever you feel comfortable with, that's what you should do. Going back to the Coinbase chart on here, that's what I see, and I have this position marked out. I have expressed this in my Telegram, the Otsu House. If you aren't in that group, it is on my link in my Twitter bio. It's there for everyone to use. I can link it here in YouTube as well. It's just free. It's just longer thoughts that I take part of, and usually things like this, I mention that in my Telegram group an hour or 2 hours beforehand, and I kind of go through that scenario. But right here, this is the pattern that I had planned out for the Wyckoff. So far, it's going okay. It needs to pump up here pretty soon. And one thing I use, so the Aaron Band color strategy, that's a strategy that I've created. This is a script that is available for everyone to purchase, but it's something that I keep to myself. Don't really advertise it, but one thing is when this turns blue, that means it's bullish. When it turns gray, or whatever color I guess that's supposed to be, it turns bearish. So when this turns blue again, this is telling me that this pattern is going to be more bullish now. So I'm waiting for that to trigger. I am not in this currently. I might be in it by the time that I publish this, depending on what happens with the price action. So far, we've had a pretty good green day so far, and I think this is reminiscent. I don't want to go too much detail into the news and stuff like that, but I think this is reminiscent of the kind of the crowds that we have with Bitcoin and crypto right now. It's everybody thinks that this is a sucker's rally. Everybody does, for the most part, I should say. Not everybody, but most people think this is a sucker's rally. They think about that in terms of the news, all the FUD that's been going on, all the, remember last year when everybody and their mom was focused on FOMC meetings? And now most people don't even care. Now it's something else, See what I'm saying? Like, I was very vocal around September of last year in saying that FOMC meetings are going to be a bunch of hot garbage. And most of you got fooled by the December one. And it's, it's been irrelevant. It has, and it's part of a mob mentality strategy. When everybody starts focusing on the thing no longer becomes the thing. It's another thing, and it's all statistics, right? Like when people look at X so much to try to see what X is going to do, X no longer becomes relevant in that thing. See what I'm saying? When it comes to trends, right? So if everybody's following a trend, the trend is going to be either hyperactive or it's going to be completely ignored. And that's we've seen the latter. We've seen both actually, but the latter has already happened. So therefore, it becomes mostly irrelevant now. When I first started crypto, and you're talking like an old fogey, but nobody cared about those meetings, and I never did. I only started caring about it because people started to care about it, and then I'm like, well, it's going to have less effect, and it did. So there was only maybe like one or two that actually had a decent effect. Long term, they don't have no effect. So this is what I'm looking at here. If I want to look at this generically, let's go on to... before I do that, this is the position that I'm looking at. I'm looking at about 32.4 for upcoming. This is the high of the order block, by the way, of the previous block. And so this is what I'm looking at. Actually, it should be a little bit lower. I apologize. So 32.3 is what I'm looking at for maybe April to early May target. I'm not sure it's going to. Yeah, maybe by the end of April. I don't know how fast this is going to go. I'm not really thinking in terms of speed, but I think we might get that for the highs, and then we're going to come back down. Is what I think, and so I think I want to keep that in mind. And that's kind of the perspective of going back way down here for the last year. Like everybody thought we were going lower, and then it's like, oh, now we're going lower. Nobody bought here, and now people are struggling to buy here. Like I've seen so many people buy, sell, buy, sell, buy, sell, and all you gotta do is wait. Like if you zoom out, and I know that's cliche, right? I know that's cliche, but nothing's happened. Nothing is happened. Pretty much since the March 19th, nothing's happened, and so we just gotta be chill. Just stay chill. Don't chop yourself out. I'm telling you. I know this is cliche, but one of the biggest things that I've seen, because I've mentored people, I've coached people, especially in the trading, sector. Most people, when I say most, I like 9 out of every 10 people that I come across, if they have an issue, it is because they trade too much. It is because I shouldn't say trade too much. That is an after effect. What they do is they try to find an opportunity where opportunities are not present, and that leads to them trading too often or when they should not be trading. And so there is a time to trade, there is a time not to trade. More often than not, it should be someone should reduce the amount of trades that they do. I saw an argument saying that people should trade more. I disagree with that, but I understand what they were saying. It's not about, it was about opportunities, and that's kind of one reason why I switched what I was going to say, because there's no problem with trading when there's an opportunity. You just need to understand what those opportunities are, and you need to capitalize on them only when they are there. That's it. So it's a big thing. I'm kind of going into the education route here a little bit, but one thing that I see for this, let's just go back to the KuCoin chart. I thought I was, maybe I wasn't. All the drawings are gone. So one thing here, and so we can see that this is a big range. We can see for the 200 that we've already eclipsed it on the daily. We've eclipsed it on the weekly. If you have not heard about my weekly 200 EMA thoughts, watch the last video I did. I've got a lot of videos about the 200 EMA. I won't mention it much anymore. But one thing I know is this pattern is reminiscent of this pattern right here. Let's see, right here. And so what happens is when you get this large candle, that does not mean that we're going to retrace. I'm so tired of hearing that over all these years. When we get a big impulsive candle like this, we do not fade that. That's not a fadeable thing, not on these levels. Those are only meant to be faded when we have some sort of news kind of action, right? When it comes to actually going outside of a range, you do not want it to retrace. You want it to continue going. It may come down here eventually. I would not be shocked because this is a bullish breaker. Bullish breakers don't tend to happen on these levels, but they do sometimes. So it's worth keeping out watch for that. But this is very reminiscent of here. Also, one thing to note, I won't pull it up, but on the Brave New Coin, the 200 EMA crosses through here. It's the exact same pattern. Look at my previous video. I'll explain that to you in that video. But we had the big green candle, so to speak, and then we had a small climb here. That's kind of what we're going to be seeing. Seems like it to me. In fact, I think I'm going to do a little bit of. I'm going to tag that, and then I'm going to go all the way on the daily and see. Okay, we did not get the reaccumulation pattern. Or maybe not. Let me see what we got here. Doing this live, folks. All right. Did not get it. That's not quite what I was looking for. I was wondering to see if it had the same pattern, but it did not. That's pretty. Actually, that almost looks distributive. It's kind of interesting. Anyway, so back to the weekly. So it looks very reminiscent of that. That's what I'm keeping in mind. Just another potential a climb up. We did retest that back during COVID, but that's I just want you to keep it in mind because it's not going to go up and down as much as you think that it will. So anyway, that's how I see that as far as a 4-hour view. Get rid of those. Get rid of that. One thing I just see is this, and I know you guys are tired of me doing that. If you are used to me doing that, but just play the range. That's about all we can say. We know that because it's currently in a range. There's two things to be aware of at all times. Are we in a trend or are we in a range? If we can identify a trend, we play the trend. If we're in a range, and we can identify that as true, we play the range. This is currently a range bound. So you want to play, if you want on a lot higher time frames, I would play the range of this. And so we can view this here. And we are currently above, so you could play along right now if you wanted to and target something like this. You could target the low, like I said. So that's something that's valid. If it goes below, you could short that. Or you could wait until we get above here, and then you could play this. Play on the opposite side of the mid there. And so that's possible as well. And I said, what did I say, 32.3, I think. So you could play something like that. And so that's kind of how I look at it. Other than that, the only other thing I can suggest is I would absolutely not be selling here. I wouldn't be. I haven't actually. I have not. I have not sold anything more than I needed to since 16,000. And this is one reason why, because we're not going down. We're not. This is not a sellable time. If you wanted to sell, I would have done it here somewhere at like the RSI bear divergence. But that time has passed, and since we have developed this is the low. I would hold. I would pretty much not change any of your positions as long as you, if you are still in positions. I don't think I would be changing any of them right now. I would just wait until this range has completed. If you are wanting to short, in my personal opinion, I would not short until we get to 26. You could short here, but really the advantage is more long in anyway. We just wait for this. This is textbook, honestly. This is really textbook. I have not traded this much in the past week because I'm just waiting to play the range. And that's one thing to note. I also said in Telegram that I'm going to play this a little bit with size, and that's one thing is much better off. Like, why would you? It's like, let's say you made 10 trades in here for 1% each, and you lost. Let's say you lost 7 of them. Well, you lost 7% of your total portfolio trading a range that ain't going nowhere. And what I'd rather do is wait for this to break bullish, and then trade this with, let's say, 5% risk. Okay, so automatically I'm taking less risk than I would have for this entire range, and I would be making more money. So let's say I did do the 3, let's say I did the 3R or whatever. Let's just say it's 3. I would make 15% of my portfolio in one trade that I know has a high conviction, that I know has a high probability of working out, and if it doesn't, I can even close for half instead of full, because once this goes below, that's a deviation. So I would rather add size to a confident trade versus not adding any size to a trade that I'm gambling on. And that's why I also said trade less. And it's not even about trading less, but find the opportunities to trade. So that's honestly that's my analysis for Bitcoin. Until we play outside the range, we treat this as a range that needs to be broken one side or the other. That was Bitcoin. So now we're going to go to Ethereum. All right. So one thing that I had mentioned, I also mentioned this in Twitter as well, is that we just approached this new high. So I kind of want to analyze that in the context of analyzing all this stuff. As you know, this is on Coinbase, but I'm going to switch that up to Being X actually, and go through that in the coming videos. But Coinbase is just a good, kind of a weighted chart versus, some other ones. That's the only reason I do it. So one thing I want to keep in mind here. Let's go ahead and go to the daily. In fact, I want to go to weekly, get a bigger perspective on this. and then we'll even get rid of that. Sorry, I just ate something, so my throat's kind of getting a little rasp for some reason. Anyway, one thing we see here, I've noticed this. I mentioned this in a lot of videos beforehand. We have this nice Adam and Eve structure. One thing you can see because of that is you have this liquidity trap area that we are approaching. So this is something to consider. One reason why we may be a little bit slower at approaching this point is because price action kind of knows, so to speak, that we are approaching that area. That's kind of how liquidity works. It's kind of the price almost becomes conscious, so to speak. Not technically, but kind of the consensus subconsciously between all the people that are playing Ethereum with the supply and demand subconsciously realize that this is important. That's one reason why prices do things the way that they are. That's why we can understand liquidity that way, so to speak. So a lot of assumptions there, but overall that's kind of relative to how supply and demand works and how liquidity works. So we have this Adam and Eve structure. What we want to see is we want to see a confirmation above this line. That being said, it's kind of like the Wyckoff theory, right? Like, we can't comprehend this until it actually touches the $2,000 range, and therefore the pattern at that instance is pretty much tapped out, right? Like, you should see continuation if that happens. Another thing we could do is it could do like a little cup and handle, and then this just becomes part of a cup. This becomes nothing, and then we get a small handle. So overall, I think the key was breaking above this 1780 range, and that's one thing that I like to see here. If we are above this range, I'm bullish, clear as day. At any point, and again, this is one reason why I think Ethereum. I say again, but I've said this in tweets and things like that. This is a very textbook type of formation. We had that, we had this rounded bottom structure, and we had the follow through, and we're kind of just floating above it. And until we break below that, this is pretty simple, honestly. And that's one reason why I haven't tweeted as much, and I kind of do have some criticism towards a lot of active traders right now, is because most of the time they're making it too complicated, way too complicated. This is mostly just supply and demand. When I teach the academy, it's a 12-week course. A lot of it is understanding how simple this actually is. And I had 0 bad reviews. I didn't persuade anybody to give me a good review either. There were some people that didn't say anything, and so I don't know what that means to them, and that's okay. In other instances, I've had a lot of people tell me, well, hey, you make things so simple in the way that it matters. And that's the thing. Like, trading is simple. The trading part, the education, all that, the understanding is simple. Knowing when to trade, how to trade is the complicated part. And it's mainly complicated because most people just screw that up to themselves. Like, your greatest enemy in the trading sphere is you, honestly. Despite the fact that there's people out to get you, like, that exists in abstract. Like, I don't want to. There is smart money out there. There's people with a lot of money out there that are way smarter than you'll ever be. But I think that's a little more fear mongering, because that's true with anything, right? If I'm applying for a job, there's people smarter than me. There's people that's a better father than me. There's people that make more money than me. There's people that are more fit than I am. There's people that go on more trips than I do. See what I'm saying? You can always find someone that's doing something better than you. And if you take that mentality too much, it becomes self-defeating. And so what you should do instead is, how can I optimize the tools that I have with what I'm trying to do for my goals? And so that's the better way to do it. And for most of us, and honestly, it should be for all of us, it should be keep things simple, apply simple strategies. Now, when you get more money, when you start working with, let's say, 10 figures, now you're starting to get a little more adaptive to your strategies. And that does take different strategies. That's one reason why people that have 30 million can't trade 30 million, because it takes new rules. You can't just, a lot of them even gamble their way up there, and then they gamble their way back down. So anyway, we're stuck in this range, but that's a good thing because I like when we break through. That means we have a new level, and when we have a new level, you need to be bullish above that level. Simple as that. It's really simple. And so, if you play this micro range, then you got the impulse off of that, and that's kind of the weekly so far. And so that's if we go to zoom into the daily, we can kind of see that a little bit stronger. We kind of got a trend line going here. I would like, if this continues by the end of the daily close, which is, let's see here. Sorry, I got like a Amber Alert. We got about 5 hours left. Sorry, or I should have said it right there. Anyway, if this can hold above the 5 hours that we have till daily close, I think this is much more significant that we could approach through the $2,000 price target that I'm looking at. Overall, this is very solid. We do have the Shanghai fork coming up. That should be coming up about mid-April. So one concern of mine is these forks tend to be bearish events once they happen. So I can see ourselves getting to, the $2,000 range, and then after the fork we go back down. So I can see that. Not saying it will. I'm saying that is a news-based thing, and usually news-based events, when they are announced, end up turning into bearish events historically. So I'm gonna keep that in mind. 4 hour time frame. I shared this on my Twitter, I believe, and so we got kind of these wicks that can kind of add some liquidity. What I tend to do is I add the first major close. I don't really count this one because it's too far of a variant between these, and then I add the top one right here. So you can kind of do like so. So this is what we had previously. Another thing that we can do is I can target the top wick up here and then target the lower ones here, but we still broke above that. So this is looking pretty good for me as far as trying to long this. I think this is worth continuing in its bullish structure. So one thing that I would do is I would probably, I would wait until the day to close. We still got 5 hours, so we got this, we got another candle, but let's assume that it closes right where it's at right now. I would probably either, like I said, I would either target the low of the candle that caused the shift. Usually it's the current candle, so I would have already actually done this. And so I would have done it right here, be slightly in profit, but not by much. Typically, if we don't get a wick like we do here, we don't really have a significant wick, I'll do the next one. Or like I said, I'll target the lows. In this case, I think that's worth considering. And if we want to target the $2,000 range, we're looking at a 1.23, which is not really that significant. So I might just push that back up there to get almost 2. That's one thing we need to keep in mind, because we have this structure right here, and let's see if I can map that out on the 4 hour. Does that show up? Yes, it does. So we can go a little bit higher here, and we can target maybe 2027. So that's kind of what I'm looking at. I think that's a fair approach, and overall, that's pretty safe. Another instance we could do is this could end up being a distributive formation. This looks kind of Wyckoff distributive esque of a formation. But one thing you do not want it to see is break below this range. So if it goes back below 18, chances are it's probably going to go back to the $1,500 range. And how do I know that? If we zoom back up to the daily, you can see right here, you can see this bullish breaker, and you have this retest. So this little gap right here, that's where I would look at for a retest. If we broke back below this range, if we go below 18,000, we're going to go to 16,000. And so like if our marker is just like this, I would target the current high and then go something like so. 2R, not bad. Not typically what I prefer. I prefer at least 2.5 minimum, but it is for some people. So that's kind of the long and short ideas for Ethereum overall. Kind of recap a little bit. I mean, I'm pretty bullish right now, honestly. Um, a lot of charts I've seen to reflect it. We're going down a little bit right here, but overall, things have been relatively resilient in the past 3 weeks. There's been a lot of FUD, and one thing that gets people trapped up is the perception of that. There's a lot of FUD. Like, last year was all about Black Swan this, Black Swan that. We've had a ton of them. Okay, we went from 65,000 to 15,000. That's a big deal, right? But now we're back up to 28, and now people are freaking out exactly like what we did last year, which isn't really reflective of the price. Things have been resilient despite all the we had enough Black Swans in last year to to extinct the market. Honestly, if it would have happened to the legacy market, that would have been imagine if all the things, Genesis, Celsius, FTX, all these things that happened to, there's other ones that I missed, of course, but imagine if this happened to the legacy market. I mean, people would be scared to trade. People would be scared to keep stocks. They would be scared to enter in their 401ks. And, we did have some regular legacy issues as well, like inflation. We had the pandemic caused a lot of inflation. There's some places that I like to eat that they inflated their price big time. There's some things I like to eat that has caused almost 100% inflation 3 years ago. That's ridiculous. And so it's affecting the real world as well, of course. But overall, the market has been awfully resilient, especially the past 3 months, considering what has taken place. And it's evident that things like Wells notices. It's evident that people are trying to destroy the crypto markets, and that's, not really going to comment on that. I'm just commenting that's a news-based thing with all the Wells notices, with Bittrex removing. Bittrex is an old exchange, one of my first exchanges, but they remove themselves from the United States because projects are starting to see that. They're starting to see how damaging it is for them to stay in the United States, and they're just opting to leave in response to that. Like when I first started crypto, there was a lot of leverage exchanges that me as an American could do, and now there's not. Now there's only like one that lets you do that. So something to keep in mind, right? And if it gets too, if it gets too much, I'll probably just leave the country, honestly, because this is something that's what I enjoy doing. It's something a lot of people enjoy doing, like companies, people, everybody's moving overseas, and this isn't necessarily going to stop these people, right? It's going to cause innovation to shift and go elsewhere. So anyway, I say all that to say, like, the people that are involved are going to shift away, and they're not going to stop trading crypto. They're not going to not be involved, and that's the thing. And so that's why you're seeing this resilience. It's not about the regulations. It's not about any of this other stuff. It's about, do you want to be involved, right? So anyway, I rambled, but the point is, you see a lot of people freaking out. One of my biggest pet peeves, one of my absolute biggest pet peeves, is people just flipping out over 1% price moves. I see it all the time. I see it almost every single day. I see very active accounts that do so, and most of the time it's not correlated with anything significant. I don't want to waste my time. I don't want to waste my time looking at a chart and realizing, oh my gosh, it went up 1%. I'm gonna be a millionaire, whatever. Or the other one, oh, it went down 1%. It's gone. It's wrecked. Neither one is true. So you need to keep that in mind. That's all I'm saying. Like, identify these things. If 1% move is, if you're trading on the 5-minute time frame, a 1% move is significant, right? But most of the time it's not. If you're looking at almost 8 hour time frame, so keep that in mind. Apply that to your, and I teach that in the academy. Apply what makes sense contextually to your trades. So anyway, that's kind of the lesson learned. That's how I'm kind of viewing this. That's kind of why I've been taking a little bit of step back. It also coincides with my traveling. I got all that going on as well. I guess you could pray for safe travels and whatnot. But one thing to keep in mind is that trade when it matters. And you can see, I can almost look, just test yourself, right? Like test yourself and look at your performance. This is why I'm making the trading journal as well. I want people to create trading journals so they can become better traders. Analyze how many trades they do, and see how that would look if you only traded the trades that matter, the trades that you see that have a much more stronger impact, right? And so something to keep in mind. So anyway, that's it for the video. I'm glad you have watched this long. Please like, subscribe. I'll try to put all the info I can into the description if you want to see more. And I hope you have a good day. Thank you.